Good morning, and there is good news around. The slower inflation print, both globally and locally, is probably the talking point for the last 18 odd hours. And let's see if it does impact Indian markets as much. It didn't impact the US markets too much, must say. But let's wait and watch. First, the global news flow, and it is about inflation. The US core CPI fell to about 5.72% in December compared to 5.88 for the month of November. So a bit of a pullback for sure. India CPI inflation fell for the 12-month low of about 5.72 as well. That's quite stunning, really. Oil is set for weekly gains on China optimism, brighter US outlook as well. So net, the inflation print has looked okay. Did it impact the US markets? I think it did. Just pull up the US market performance and minor greens, not as strong as yesterday, but green nevertheless, which is actually a good sign. Not that I think there is too much of a reaction that happened on the other cues. So if you look at the dollar index was down, yes, and VIX was certainly down, but the 10-year yield, which is essentially the key barometer, didn't budge too much. But you have to keep in mind that 10-year yield has come off quite a bit from where it was. And again, I mean, there's still an expectation of hikes in the US. In fact, the chances of that 25 basis points, the probability is actually inched up in the last few, but slower rate hikes might be the call of the day. In fact, I was reading the Greed and Fear note by Chris Wood, and I think somewhere in the note, he's expressed an opinion that he'll be surprised if indeed the Fed even reaches the 5% mark. Now, who knows? I think the Fed has now unequivocally said that do not focus on what the market is saying, focus on what we are saying and what we are doing. So let's just stick with that. But the print is positive, and which is actually from a risk assets perspective, which is a good sign. Frankly, we need inflation to come down for the standard of living across the world to improve, really. So that's not a bad sign. The SGX Nifty should come up on your screen next. I would expect that it's up, yes, about 0.21%, and expect Nifty to, well, I don't know about 7,950 or thereabouts, but yeah, those could be the levels, circa those levels where we might have a start in the session today. Now, remember, all positive starts of late are getting sold into. And, viewers, I think, uh, yeah, actually, just before we get to trade setup, what I do want to mention is that I think what we got to keep in mind is that while the mutual fund SIPs are on, look around you, look around your friends and family, and I think the the enthusiasm of investing in stocks from retail direct investments has done come off. It's a point made to me yesterday by Manish Dangi, and I kind of concur fully that if I look around myself, people who are investing into directly into stocks, that enthusiasm has come off, and as a result of which we are seeing these reactions to FI sell numbers. FI sell, the markets go down. There's a bit of a return to that template. So bear that in mind. The FI flows are consistently negative currently. Maybe they're pulling money out of India and going into China. That may be the case. In fact, that probably is the most likely case. And as a result of which we are seeing that impact being felt on the Indian markets, which was not felt in the previous years, because even if FIs were selling, the local money flow was so strong that it was kind of absorbing all of that. I think the direct money flow might have come off a little bit. So bear that in mind. Nevertheless, the trade setup for the day today, the cooling inflation print in US and India does augur well for stocks today, to my mind. Oil sensitives might be a tough place to trade in, though, given the China optimism versus the Western pullback. And here, too, viewers, remember, oil is set for the best weekly performance in the last few weeks. And that's a result, I believe, of the China optimism. Now, if crude came off and came off quite substantially, and people thought, let's bet on the oil sensitives, I think you're seeing a slight pullback out there, out too, and therefore very difficult to trade this back. So be mindful of that. IT stocks starting to see some very positive coverage today. Macquarie's made some very interesting points, and I'll bring them. But strong outperformance, to my mind, is difficult. To my mind, in fact, frankly, that uptick that we saw on Monday kind of made peak, but you might well see Infosys react slightly positively today. Some of the other mid-cap IT stocks react slightly positively today. So that's what you got to watch out for. FIs continue to sell. I may not have that number, but FIs continue to sell. So keep that in mind. And today's an important earnings day as well. There is Wipro again. So we'll have the big four out by end of day today. So that will be interesting. There's Just Style, there's L&D Finance Holdings. So a few to watch out for. What about stocks to monitor in the session today? First up is Infosys, to my mind. Um, Good showing, you would have to say. 38,318 crores versus expectation of 37,963. So revenue above estimates, EBITDA margin flattish but largely in line. Profit numbers 11.33% higher at 6,586 versus the estimates of 6,465. So marginally higher than estimated, but I mean, not a beat compared to estimates, but still marginally higher. And they've raised their FY23 revenue growth guidance to 16 to 16.5% from 15 to 16%. This is classic Infosys, you know. It reminds me of the Narayan Murthy days, wherein at the start of the year they would come out with a number, then they would consistently go above if the scene presented it. Under promise and over deliver. That used to be the mantra of Infosys of the old. They're kind of quite hitting those traps yet again. I would suspect that this should be construed positively, despite the fact that Infosys is not a cheap stock anymore, relatively to other IT stocks, relative to TCS itself. I think that has been decent performance, but this should be construed positively to my mind. Expect a bit of a positive reaction in Infosys today, unless I'm very wrong. You know, where I'm confused, viewers, is HCL Technologies. Now, the numbers, big beat. I mean, look at that. Look at that performance. 8% revenue growth is stunning by any stretch of imagination on that base, by the way. This is what mid-cap IT companies do. But 8% revenue growth, 26,700 versus estimates of 26,089. Big beat. EBITDA margin 19.58 versus 18.5 estimated. Net profit 4096 versus 3814. You can't find a fault with these numbers, but for the fact that HCL Tech has gone ahead and reduced that growth guidance even more to 14% in constant currency terms. But you know, we did a bit of math yesterday. My colleague Tushar predominantly did that math. But I want to bring this to uh, you. So based on just simple math, constant currency growth, that they did 2.7% in quarter one, 3.8% in quarter two, 5% in quarter three that they have done, and a very strong growth, as I said, leaves them with a number of 1.78% for quarter four. So points to a very feeble quarter four. Now, I reckon that the street will look ahead at FY24. They've got a very strong TCV, and the management has expressed confidence in the presser yesterday that they'll do well. So it augurs well for sure for HCL Technologies for FY24. Valuations are in favor as well, and Q3 is a big beat. My problem is that Q4 will not be a strong number. Now, does the market therefore look at quarter four in the very immediate term? Because might be difficult to look too far ahead for IT, or does the market say that, hey, you know, they've said that quarter four is not going to be good? We know that because they'd already reduced the guidance earlier in between quarter two and quarter three. The flip flop was already done, and therefore, does the market look at the TCV and FY24? Maybe not as clear cut as Infosys. That's my limited point. Left to me, I believe that there could be a bit of a pullback, but let's wait and watch. I might be wrong, really. And for HCL Tech shareholders' sake, I hope I'm wrong. GTPL, Hathway, and then both came out with numbers. Then was okay. GTPL, I just thought was important to highlight that the margin number didn't look strong. 16.3% EBITDA margin versus 20%. So kind of a weak number quarter on quarter. Let's see how it does. PVR and Anos Leisure, the Mumbai bench of NCLTs approved the merger of the two companies. They were very active in trade yesterday. I think this was much anticipated any which way. So I don't know how much of a further positive reaction. So if you're trading both of these, just keep in mind that there's a bit of an uptick that has already happened for PVR and Inox Leisure per se. So, so that is the one to watch out for. I'll just try and see if I can kind of bring to you any note that might have come in. But nevertheless, be that as it may, I just think that in per se, this is a positive move for PVR and Inox. And from an investment perspective, not a bad bet. They're doing a lot of things to improve the in-screen experience. They're probably the only game in town now, so to say. And therefore, I mean, ask yourself, if you had to go out for seeing a movie, one or two instances notwithstanding, do you go to any other place but for these two? That should be the answer. If it's a different answer, then please tell me as well. In Mumbai, at least, we don't, it's either a PVR or an Inox. Okay. L&T Technology Services to acquire the smart world and communication business of L&T for 800 crores. Nothing too dramatic, but I just thought it was important to highlight what one or two brokers are are thinking about this piece as well. It is an 800 crore acquisition, which I have anyways told you. So Dolat Capital or DART has a sell rating below with a downside of 11% there, because they believe this is an in-house acquisition in an unproven landscape and a lower margin business. It can help LTTS achieve its guided $1.5 billion run rate by FY25, but the path to achieving LTTS's profitability is likely to be an elongated one, they believe. So EBITDA margin profile is about 8 to 10% for this one, and therein lies the issue that I think Dolat Capital has with this acquisition. So, well, let's wait and watch how LTTS does in the session today. What else? Yeah, there is the 197 communications of ATM block deal details out and unexpected lines. We now know that Alibaba sold that stake. So, I mean, um, yeah, this might well continue. Who knows? So watch out for ATM. And like I was saying, there is some commentary from Macquarie on mid-cap IT. Now, the one that stood out for me was Macquarie, the coverage initiation on persistent systems. The recommendation was outperformed. The price target set to 8330 rupees, which implies a 109% increase from the last price. They also have LTTS with a recommendation of outperform the price target of 4630, a 27% increase. Mastech, a price target of 2720, a 61% increase. They have, I think, a hold on Infosys or a neutral on Infosys and outperform on Birlasoft. So they've come out with a note covering the non-nifty IT names, I reckon. But the one that stands out really is Persistent Systems. The price target has been set to 8330 rupees, which is a 109% increase. So one, I think a lot of sell side would be thinking, what is it that they are seeing that we are not? Part one. Maybe it's 2 year out. This thing I haven't seen the note as yet, but I just thought I'll bring it to you that this report will be the talk of town today. So to be mindful of that. That Macquarie says it will do doesn't mean it will happen. But the names that they've put out, most of them are actually performing really well on the revenue growth fund, be it Persistent, be it LTTS. Maybe Mastech turns around despite the UK issues, who knows? So interesting thoughts, and therefore it firmly puts IT in focus today, frankly. There is Wipro to come out, Infi and HCL Tech to react, a large brokerage house coming, a strong brokerage house coming out with a large note on mid-cap IT. So do watch out for IT services. I'm particularly not extremely gung-ho, but well, who knows? It's a interesting one. Anyways, just before we wrap up, like I said, this will be amongst the last trade setups for a few days because BQ Prime and I am headed to Davos and will bring you all the updates from the Swiss Fortress over the course of the next 5 days. Thanks so much for tuning in today.
The tallest leaders in the world are coming together at the World Economic Forum at Davos at a point of time when growth is stuttering and the world is looking up to these leaders who will matter to address the systemic risks. And while the world is looking towards India for multiple solutions, we will look out at how the world is getting up to face the challenging 2023 and what role will India play in the world in this year and arguably this decade through a series of conversations with business leaders and thought leaders. I'll be there in Davos representing BQ Prime and will be particularly interested in the commentary from global companies around their interest in India, both long-term and for 2023. For a ringside view from the Swiss Fortress over the course of the World Economic Forum, be on BQ Prime.